Hello guys, my name is Brian Nyakwaka. I'm a financial analyst and a full-time forex trader. So I want us to be together in this account that I'm going to start from $71.60, and I want us to take this account to $1,000. So stay tuned, and in case you're new here, please don't forget to press that subscription button and notification bell for me. Each and every time I'll be dropping a new video, you'll be notified. So we want to trade gold and other major pairs, so that we take this account from $71 to $1,000. So $1,000 is our target. So stay tuned. I'll be sending in every day trading history so that you guys can follow up. I'll be explaining each and every step that I'll be taking to execute both going long and going short orders. So I'm going to take you through this gold and USD 15 minutes time frame. I want to take you through as I'll be executing orders. So currently the chart, or rather the price, is on a downtrend. You can see it's making lower lows and higher lows, lower lows, higher lows, and then on another lower low. So here right now you can see it has reached at this previous support zone, which was at 1960.93. This was that previous resistance zone. So there is a possibility of market retracing or a continuation. So we are waiting until this candlestick that is forming right here to complete forming, so that we get to see what is happening here. Remember, we discussed earlier on that candlestick anatomy is very, very important. The way candlesticks portray their body system is very, very important. Candlesticks with large body signifies strength of either buyers or bulls in the market. And when a candlestick forms a body which has got smaller which portrays bodies with which are very small, it shows indecisiveness in the market. More so when for example, you can see the market is on a downtrend, and it keeps on forming these types of candlestick which has got longer lower wick, and there it gives us information that there is a possible reversal. So you see the market went down a bit, so we are waiting for the market to continue forming this candlestick that is forming right here, so that we can decide or conclude that the market is on a downtrend or there is a possible reversal. So remember, we closed our entry. Let me show you. This was our morning trade. We closed it at 11 in the morning. We used 0.02 lot size, which is 5.02. So let's wait and see what the candlestick will give us. We are remaining with 2 minutes so that we get to know what trend the market will be. So since now the chart is portraying candlesticks with the small bodies, or rather you can define them as spinning tops, there is a possible reversal. So the other tool that we are going to use here, we are going to use Fibonacci retracement to see at what point will the market retrace at. And before I put that Fibonacci retracement, I just want to take you through this RSI 14 relative strength index, which shows how much the market has oversold and at what point is the market going to retrace. So from this point you can see the market is below 30 point. When it's above 70 points, it shows us that the price has overbought. The price has been overbought, so there is a possible reversal. When it goes below 30, it shows that the price has oversold. So let's just let us just put Fibonacci retracement so that we get to know how the market is going to retrace. Yeah. So we are going to put our Fibonacci retracement tool to see on what Fibonacci point is the market going to retrace at. So Fibonacci retracement, we are going to put it from this point, our recent high, up to our recent low. Yeah, from our recent high up to our recent low. So we are going to put it here. Our recent high up to our recent lows. Let me just zoom in a little bit so that you can see. Up to our recent low. Which high are we going to use? Yeah, this one. Let's just use this one. Up to our recent low. Yeah. So let's wait and see at what Fibonacci point is the market going to retrace at. So let's wait until it gives us confirmation. As to where it's going to retrace at. So let me just put this properly. Yeah, we can see the price as we traced up to 23.6 retracement, Fibonacci retracement points, and it's giving us a longer upper wicks, or you can say longer upper shadows, which is implicating that sellers are dominating the period. So let's just wait for confirmations to see whether the succeeding candlestick is going to go short. Now you can see at 23.6 Fibonacci retracement zone, there's this indecisiveness in the market, these two spinning tops that have appeared. And when you see two spinning tops appearing, it's showing that there is indecisiveness in the market. Only when it appears on a trend, on a very visible trend. So here you can see that the succeeding candlestick that is forming has got a longer body, but yet it has not finished forming. So let's wait until the 15 minutes finishes and we get to understand what direction the market is going at. Remember, still it's at 23.6 Fibonacci retracement zone. So let's just be patient and wait and see how it is going to behave. Yeah, so remember, even when it was at 1966, our previous resistance zone. Yeah, so remember also, it has not passed our previous support zone, which was at 1960.81. So when it passes that point, now it's giving us a clear indication that the trend is going to go short. So we are going to execute a going short order at 0.02 lot size. Remember, our margin doesn't allow us to trade more of that, so we'll just restrict our executions at 0.02 lot size. Also, always put your attention at the relative strength index to see whether the price has been oversold or the price is overstretching upwards. So always also put your focus on that. We can add another one. We call it moving average. 15 moving 15 is a moving average. So let us just use it at a default mode. So you can see here the price is below the 15 minutes moving average. It's going down, so it's below that moving average, indicating that the price is on a downtrend. So let's see how it's going to behave at this point. Okay, like now you can see it's forming candlesticks with longer upper wicks, which it's now confirming to us that there is a possible reversal. Now that retest is about to end, and you can see the price reached 61.8. So let's wait until it finishes to form this candlestick, and then we enter a going short order. So this, it gives, as you see at the first the preceding candlestick, it formed a candlestick with this upper longer wick, and then now this one, which has a longer upper wick, which is now showing us that there is retrace is about to end. So at this point we are going to execute a going short order, because you see it has confirmed to us at this point that there is two candlesticks that has formed wicks with upper longer ones, the first one here and the second one, which is this one. So we're going to execute a going short order, then we're going to put our stop loss right above 61.8 Fibonacci retracement zone, and then we're going to look at where now we're going to put our take profit. We can put our take profit at this point here, 1944.35. Then the second take profit at 1932.91. You remember we executed a going short order after the price reached a 50.0 Fibonacci retracement zone, after we saw this candlestick with a longer upper wick. Then we entered a going short order. So let me just show you how the trades are going. You can see actually the trade is downwards. This is 6.8. They've given us $12, so we can easily close this one, because I have seen there is a candlestick that has formed there, a spinning top that has appeared there. So let me just close these ones so that we take them home. Yeah, so remember our target is taking this account to $1,000. So right now we are at $83 from $71. So far we have made $16